Okay, today, we're really jumping headfirst into a stock that's been, well, making a lot of waves lately. NVDA.
Yeah, it's definitely one people are talking about.
Exactly. And our mission here isn't just, looking at the raw numbers. We want to properly understand the story, the multi-layered story the market seems to be telling us through the charts. We're going to try and pull back the curtain on the technical analysis, hunt for those signals, maybe those hidden signals that could give us clues about potential moves, and yeah, maybe even spot some opportunities.
It really is a bit like being a detective, isn't it? Each time frame, it gives us a different piece of the puzzle.
I like that.
Yeah, and together they paint hopefully a more complete picture of what's actually going on. We're not just crunching data here. We're trying to interpret the market's language, looking through different lenses, From that really broad monthly view that's like our big landscape, right down to the tiny details on the 4-hour snapshot. For those more immediate tactical insights, you'll see how these pieces kind of fit together.
Love the detective analogy.
Yeah.
Okay, let's grab our magnifying glass then and start with the biggest picture. Really zoom out.
Yeah.
When we look at NVDA's monthly chart, wow.
Yeah.
What really jumps out is this incredibly consistent, pretty powerful uptrend. It's been going since, January 2019?
That's right. A long time.
Yeah, it's been riding quite gracefully inside what analysts call an ascending channel. Almost like it's on this well-defined highway, it just keeps printing higher highs and higher lows. And right now it's trading around, $170? That's quite a journey over several years.
It really is. And that ascending channel, just so everyone can visualize, it's basically two parallel lines sloping upwards, right?
Yeah.
And the price action is sort of contained within them.
Neatly contained.
Yeah, exactly. It signals strong, sustained bullish momentum. Think of it like a river just consistently flowing upstream. But even with such a strong current, we are seeing some interesting things happening just beneath the surface.
Okay.
So our first kind of crucial observation on this monthly time frame, it's a significant one, the trading volume. It's been steadily decreasing since March 2024.
Okay. And why does that matter specifically? Decreasing volume in an uptrend.
Well, think about it like this. The price is still going up, but the volume, the participation, is thinning out. It's like a car still climbing a hill, but the engine's getting quieter. The conviction, maybe the force behind that climb, might be waning, or at least it's not as strong as it was. It suggests maybe less fresh money is aggressively stepping in at these higher levels.
That is subtle, but yeah, potentially powerful, like the market's whispering something, even while the price keeps climbing. What else are we seeing on this long-term view?
Well, something even more compelling, I think, the monthly relative strength index, the RSI.
Yep, the momentum indicator.
Exactly. It measures the speed and change of price moves, and it's flashing a pretty strong bearish divergence.
Okay, explain that divergence a bit more. What does that actually signal?
It's a classic alert, really. A bearish divergence happens when the stock's price makes a new higher high, right? Still looks strong on the surface.
Right.
But the RSI, its momentum indicator, makes a lower high. It fails to confirm the price high. It's a sign that even though the price is pushing up, the underlying buying power, the actual force driving it, seems to be losing steam. It's like your speedometer says you're going faster, but you can feel the engine sputtering.
So, okay, we've got this incredible multi-year uptrend, a real testament to NVDA's strength. But then these subtle, maybe not so subtle warnings now. Declining volume, this bearish RSI divergence. It's like the long-term bullish engine is starting to show some signs of strain.
Precisely. And there's one more piece to add to this complex picture. That upper trend line of the monthly ascending channel, it's acted as a pretty tough ceiling. It's been tested 4 times already.
4 times?
Yeah.
That's significant resistance.
Very significant.
Yeah.
So this raises a fundamental question for anyone watching the charts. What happens when a long-term, really well-established pattern like this channel, with these internal warning signs brewing, approaches a potential 5th test of such a major resistance point?
Right.
Specifically, if the price does manage to reach that upper trend line again, and we project that could be around the $200 mark, our analysis suggests that a significant drop could potentially follow in the coming weeks. That combination, decreasing volume, the bearish RSI divergence, and hitting that repeatedly tested resistance line, that creates a really powerful confluence of signals. Something you probably shouldn't ignore.
That's a lot to take in just from the monthly. It paints this picture of, a strong stock, but maybe nearing a really critical point.
Okay,
let's pull in a bit closer. Let's shift to the weekly time frame. Do we see those same warnings getting louder, or does a different story emerge about its more recent path?
Yeah, shifting to the weekly, it lets us see how those bigger trends are being navigated, in the nearer term. And it definitely shows that the bullish activity has been quite persistent recently.
Okay.
Here's a key thing. NVDA tested a strong demand zone. This zone first showed up back in August 2024. And this test happened more recently, in April 2025. Now, when we talk about a demand zone, just think of it as a price range where historically a lot of buyers tend to step in. It acts like a floor.
A support level.
Exactly, a support area. And this zone held firm. Once it was tested, it actually fueled a pretty strong resumption of the bullish trend, pushed it back up.
So that demand zone held up really well, pushing the price back up strongly. Does its strength there kind of outweigh those longer term warnings we just talked about? Or does it just make things more complex?
I think it highlights the complexity beautifully. And just to underline that recent strength, the stock also managed to break and close decisively above its previous all-time high. That was near $154.
Okay, breaking new ground. That's usually very bullish, right?
Typically, yes. It indicates fresh buying pressure is taking the stock into uncharted territory. However, and this is really critical, despite these strong bullish moves, the weekly RSI is also showing that same bearish divergence. It's mirroring the signal we saw on the monthly chart.
Wow, okay. So even on the weekly, with the new highs, that underlying momentum is still lagging behind the price.
Exactly. That consistency across different time frames, it's a powerful reinforcement of that potential warning sign, even as the price itself keeps pushing higher. It's like the market is shouting, yes, we're still climbing, but pay attention to the underlying fatigue.
That really adds another twist to our detective story. We've got bullish price action, new highs, but this underlying momentum indicator is still flashing yellow, maybe even orange, on both the monthly and weekly charts. Okay, this brings us to the more immediate action. Let's narrow the focus again down to the daily chart. What immediate movements, what critical levels should we be watching for on this shorter term pulse?
All right, honing in on the daily. NVDA is currently trading within its own ascending channel here too. It sort of mirrors the longer term structure, but obviously on a much quicker scale.
So the day-to-day trend is still up, contained within this smaller channel.
Correct. It shows that general bullish sentiment is still carrying through day to day, like a smaller, faster river flowing inside the bigger one. However, given those broader warnings we've unpacked, we really need to pay close attention to potential breakdown scenarios here.
Okay.
Understanding these daily thresholds, these specific levels, can be incredibly important for trying to anticipate immediate price action.
So what is that crucial level on the daily? The one that could signal a real shift in the immediate trend?
The critical level we're watching closely on the daily chart is $163.
Okay, 163.
If the price breaks and, importantly, closes below $163, that would be a very significant signal in our view.
And what would that imply?
In that scenario, our analysis suggests the stock could then decline towards the $150 level, perhaps over the coming weeks. That $163 mark is acting as a key short-term support right now.
Got it.
A break below it would mean that this daily ascending channel isn't holding anymore. And that could potentially open the door for that move lower, which would start to align with those longer-term bearish divergences we saw on the monthly and weekly.
Right. It would be a strong sign that the short-term uptrend might be finally succumbing to those broader pressures we identified.
Precisely. It would be a clear indication.
Okay. We've gone from the multi-year view through the weekly, now the daily. Feels like we're really zeroing in. So for someone looking for maybe more tactical ideas or just trying to understand potential moves in the very near future, what does all this boil down to on the most granular level we're looking at today, the 4-hour chart? What are the immediate scenarios, the targets we should have on our radar?
Yeah, this is where we try to distill everything down into potentially actionable insights for the very short term. On the 4-hour time frame, we're looking at two main scenarios unfolding, always keeping those bigger signals in the back of our minds.
Okay, scenario one.
Scenario one is a potential short-term buy trade opportunity. If the price manages to hold within the zone of roughly $166 down to $164, that's a little short-term demand area we're seeing. Then a bounce from there seems plausible. A short-term buy trade could be considered. The immediate targets for that kind of bounce would be up around $178 to $182.
Okay, $178 to $182. Why that specific zone?
Because that $178, $182 area is expected to act as quite a significant supply zone. Looking back at the chart, historical price action shows there's likely a buildup of selling pressure or maybe profit taking around those levels. It makes it a likely ceiling for just a short-term rebound.
Gotcha. So a bounce from around current levels could take it up towards $178, $182, but that might be where it stalls out due to historical resistance. What if it doesn't stall? What if it pushes through that ceiling?
Right, that brings us to our alternative scenario, the more bullish breakout potential. If the price manages to break and close above $182, really decisively clearing that supply zone we just mentioned, then NVDA could well continue its ascent. In that scenario, it could push higher, aiming towards that really significant monthly ascending channel's upper trend line we discussed way back at the start, the one up near the $200 mark.
Connecting back to the big picture.
Exactly. These specific price points and zones, like $163, $164, $166, $178, $182, they give us concrete levels to watch for potential short-term action. And seeing how they connect back to those really long-term trend lines and signals, it's fascinating, really. It shows just how interconnected all these different time frames truly are. Each one influences the next.
This has been, an incredibly insightful deep dive into NVDA, truly peeling back the layers, like you said, of its market story. It's really clear that looking at the same stock through these different time lenses, monthly, weekly, daily, 4-hour, it reveals distinct yet profoundly interconnected narratives. From that multi-year channel with its subtle, maybe growing warnings, right down to the immediate 4-hour tactical plays, we've seen how different signals can both reinforce each other and sometimes create these really intriguing contradictions.
And I think that's really the core takeaway here, isn't it? The critical importance of synthesizing information across multiple time frames. You absolutely have to.
Yeah.
You've got this powerful, sustained, long-term uptrend, right? But then you have these immediate, more nuanced warning signals, like the decreasing volume, like those bearish divergences showing up consistently on both the monthly and the weekly RSI.
Right, that consistency is key.
It is. So this deep dive into NVDA, it really highlights a fundamental question, I think, for you, the listener, to consider in your own analysis of any market. How much weight should you actually give to a strong, long-established trend that seems to be losing its internal momentum versus those more immediate, subtle, but persistent warning signals?
That's the million-dollar question, isn't it?
It is. It's a challenging balance, no doubt. But NVDA provides a really compelling real-world case study for understanding how you might approach it. So the final thought maybe is, what does this layered story with its strengths and potential weaknesses prompt you to consider about the next potential moves, not just for this stock, but maybe for the broader market too?